I'm here, and we're going to be starting our weekly review for the week ending in September 19th, 2025. So, another week is in the books, a rather large one considering that it was triple witching OPEX, and now we're kind of officially heading into the back end of the year. And most people thought September was going to be bearish. I saw a lot of chatter around that. That's something that we discussed in the room quite a few times. And really, the main thing that I try to stress in the room is that when everybody is telling you the same thing, it's unlikely to happen in the stock market. If everybody had the potential to be correct about something, then everybody would be a trillionaire. So I would have expected September to be bearish as well. The seasonality certainly is the worst for September, and then it picks up towards the back end of the year usually. But the one thing that kept me from adopting that point of view was the fact that going into September, the latter stages of August, there was just endless chatter about the seasonality and whatnot around September and how markets are going to crash and all this stuff. And eventually, these folks will be correct, but one thing that I always look for is everybody saying the same thing? And everybody was. So let's dive into the video here. We have a decent amount to cover, I would imagine. For those of you that are part of the Mastering the Trade room, I hope to see you in my session 9:30 Central on Monday, because I'm going to do my weekend work. It's going to be a deep dive like I usually do, and then I'm going to share that with you on Monday. I think it's going to be an important time to do that because there's a lot of moving pieces in the market, and doing the deep dive is certainly beneficial. But for the rest of us, especially for the folks on the YouTube, we'll do a little bit of a preview in terms of what I typically would do for the weekend work. So let's dive in. Let's start here with SPY. And then towards maybe the latter part of the video, I'm going to show you the stuff that's really moving. Unfortunately for me, it's not the stuff that I normally like to trade, so I'm going to have to do a little bit more work than usual, because normally I like to trade the indexes and the big stuff, and it looks like the big stuff has had its move, which I'll show you here also in just a second. But where there's a lot of action and a lot of movement is in the highly shorted parts of the market. So we'll see if we have time to cover that today. Let's dive in here with SPY. So weekly chart, daily chart as usual. Nothing really to see here. Everything has been status quo for basically since the April lows. Essentially, you got this buy signal here, which is remarkable. I mean, look at that buy signal, and then look at the result. You have not gotten a single sell signal. You didn't get a sell signal there, or there, or there, or there. Right, and here we are, flirting with all-time highs in the indexes. So pretty cool. I don't remember the last time that I've seen a signal go this long. You see how it's just pinned to the absolute top here? That's just, this is legendary stuff here. This just doesn't ever happen, but I'm not really in the mood to fight it, so I'm just going to continue to go with it for now. But my anticipation is that I'll title this video "Euphoria is Worse Than Fear," which is something I heard Danielle say in the room today, and I was like, you know what, that's probably the video title. Euphoria is worse than fear. So, the higher that it goes, I don't want you to get euphoric out there. I want you to always look at risks first. And it's easy to say that, but when the market is going straight up, it's difficult sometimes to put into action, especially when you start to see all the money pouring into your account. Euphoria is worse than fear. So if you find yourself feeling euphoric, maybe take a walk around the block, come back, and reassess your risk. Nothing really to see here, though, on the weekly chart. Relatively strong candle, I suppose. Closing near the highs, closing above last week's high, making a higher high, a higher low, a higher close, a higher open. So pretty strong bar overall. Everything here looks pretty much perfect. Of course, just because it looks perfect doesn't mean that this is a great spot. You are relatively extended from decent support levels, but the market has not stopped yet. And also, one point here before we continue forward, I watched the Powell presser on Wednesday, and they asked him a pretty important question towards the end of the presser, which was, do you think that, I'm going to paraphrase, but do you think that stocks are overvalued? And I'm watching him sweating bullets. Like, please don't say yes. And he didn't. He said that he doesn't think stocks are overvalued. So, is that a green light to continue the melt up? I couldn't imagine a better one. So, when the guy that's in charge of the money printer tells you that stocks aren't overvalued, maybe maybe they have more to give. We've been tracking that mindset through one specific ticker, which we'll look at here next after the cues, and see if you can guess what that ticker is. It has a monthly squeeze that I brought to you last week, and I thought, well, perhaps the market needs to go to the targets on that squeeze that we're going to look at next before it actually has any issues. So here on the NASI, everything fantastic. Again, some same buy signal as the cues or as the SPY, and no turn signal whatsoever. Really impressive stuff. Hitting 600 for the first time ever on the QQQ, that's a big number. So we'll see how that plays out. Sometimes big psychological levels like that are actually breached and then they come back down. So I wouldn't be surprised to see a little bit more on top and then potentially a retest. But there's really not a lot to see here. This is just a rather perfect chart. And the only issue with it is it is perfect. It doesn't have any squeezes. And it's not necessarily near a great entry point, but it is a perfect chart other than that. If we go to the IWM, this is what I was looking for to get to its logical targets. Wow, new all-time high this week by just a whisker. By a whisker. Okay, so again, IWM here is quite strong. Let's go to the meat and potatoes of this idea, which is the monthly squeeze. So my thought process was the market is probably going to have a blow off top. And a lot of it is already actually starting. We've covered that briefly in the beginning part of the video when I told you that there's a lot of stuff in the market that's just popping off like crazy. You have things like nuclear and quantum, a lot of the short squeeze stocks, a lot of the smaller stocks. There's just really, really big moves. And a lot of that obviously has a positive feedback loop into the IWM because these are all relatively small stocks. So my bias is that IWM probably needs to take out this high before we can actually call for any kind of significant and meaningful market top, right? So I'm not really in the business of looking for a top until I get a signal from price that would justify that idea, or once I get this upper target right around 267 IWM, and more importantly, triggering this squeeze to fire long. So this is still one of the bigger signals that I see out there, and it feeds nicely into what we're going to cover here in just a minute, which is all of the dumpster stocks just really going nuts. So let's check out bonds really quickly. We'll do it again as always through HYG. We look at HYG as just a metric for risk appetite. As long as HYG has a strong score and a strong pattern, we look for continuation in risk equities. So even if you don't ever trade HYG, which most of you won't, if you track it, it is a very good proxy for risk appetite. And here, pretty strong candle, higher close than last week, higher low, higher open, pretty much everything. So not seeing a whole lot there. It looks a lot like the indexes, and that is a continued point for the bulls. Let's jump over to the dollar. So the dollar here is probably going to be the next thing that needs to go lower in order to get a continuation of the rally. And I can't necessarily guarantee you that it will, because it is looking like it wants to put in a base here. But at the same time, this is a really ugly chart. So this chart is going to have an easier time going lower than it will going higher, just based on the fact that the weekly chart is a max bear and it has a rather large squeeze. One thing I don't love seeing is the undercut here of this low. I think if you're bullish on equities, you definitely just want to see the dollar just peak through that low and just kind of get it over with. That might happen as soon as next week, depending on how the market trades. But if we start to see the dollar here, the Dixie break 96.5, I think that's a pretty big deal So what I'm going to do is actually, and the level is actually a little bit closer to like 96 third, but I'm going to leave an alert here on my Dixie chart, basically at 96,333 into infinity, and leave that as an alert. And then that way, if it triggers that it's breaking there, then that's my signal that there's an additional point for the bulls. Right now, I would say that this is more of a neutral situation. I understand that it is a max bear, so this is certainly going to have an easier time going short than long, which is good, which is bullish for equities most of the time. But in this instance, because you have the undercut below this major low, and then a pop back above, I'm going to give it more of a neutral kind of situation. So the indicator right now says neutral down, and I would actually agree with that. So I would say this still is going to be a point for the stock market bulls. I just wouldn't give it a full point, right? HYG gets a full on point. This one maybe gets, a third of a point. Let's jump over to VIX. So the question is, how low can VIX go before it decides to pop up? And one thing that I've been looking at with you guys in these videos is the squeeze histogram. So doing TA on the VIX is, a little bit funky sometimes because it's a mean reverting product, so it's not necessarily going to be friendly to TA the same way that a stock would. But you see how the squeeze histogram here continues to kind of grind up towards the central line? That doesn't look ready to me, right? When it's ready, it will look like this. So let's use an example that's already happened. You see this entire block that I'm blocking in here, right? And then compare that to this block. Where would you say, in the previous example of something that's already happened, where would you say we are? I would argue that we're probably somewhere here, where I put the X, right? And you see how the squeeze histogram has to continue to grind up towards the central line. Once it then goes above the central line and the histogram then prints positively, like I just put in with the circle, that's then what opens up the door for a big move. So if that's the case, if we happen to be at the X, and I'm fearful of the circle, then where are we now? Well, I don't think we're at the circle yet, right? So the circle probably, if it continues this rate of ascent on the histogram, it'll probably trigger around October. So maybe a little bit of a spooktober. I don't think folks are looking for a horrific October as they were September. So maybe the big surprise, whatever it happens to be, happens in October. But that's the same thing I told you last week, and this week is just a continuation of that. So for now, I would prefer to see the VIX go lower, maybe give me a 14 print. Allow me to sell all my longs at all-time high prices, and then they can rug pull the thing if they want. Let's go to the VVIX. So the VVIX, same idea. Doesn't need a whole lot of commentary. We already made the commentary, so you can see here that this doesn't appear ready to me based on the squeeze histogram alone. It either needs to be flat or have an upward bias, which this one does not have, but it's on its way. So I would still say this gives points to the bulls as well. Again, not as strongly as HYG, but it definitely is in the bullish camp. So I really haven't seen anything that would disprove the bullish ideas so far. Let me do this real quick, because one major thing that I had been stressing to you in these videos is the idea of the barbell trade. And that was IWM and all that junky, dumpster stocks on one end, and then Mag 7 on the other end. And that, for the most part, has worked. If you've traded either junk, which, all the stuff that's popping off today is pretty junky, or if you've traded the Mag 7, and you have to be a little bit selective, but the Mag 7 as a whole has really popped off. But now the issue is that there's no more squeeze on the Mag 7 index, right? So that was a big part of what I was hanging my hat on in terms of telling you the barbell trade. The barbell trade being, IWM on one end and Mag 7 on the other. And I think that this is being a bit disrupted at the moment. So I did want to take a moment to show you this, because while this is a very, very strong chart, and there are some short-term squeezes on it, the squeeze actually has fired on the Mag 7. So there's actually potential going into next week that it actually will not be will not be more of that idea. Before we continue, let me show you this. And of course, I was bullish coming into this week. I did not think that Jerome Powell would be the rug pull, so I was bullish coming into this week. I'm long going into next week. I don't have any shorts, but I am not as comfortable telling you that I'm bullish. One of the main reasons is the Mag 7 index has fired long, and this is a huge part of my argument that it was bullish. But then when you look at the Trader's Almanac, you see these friendly little bears here, or maybe not so friendly little bears, and they're kind of peppered all over the map here, with a pretty strong focus on the beginning part of next week, right? The beginning part of next week, at least historically speaking, actually is pretty bearish, statistically and significantly bearish. Thursday gets a bear, but it's actually not as significant as the first 2 days of the week. I would put a specific focus on the Tuesday, the 23rd, as a risk day, so be very careful with that. But this is something that we have to weigh into our thinking as well. So, could this be another situation where, folks are expecting a bearish week next week, and then, you don't get that? There's a potential. I don't have as much confidence. Last week I had pretty high confidence telling you that this was going to be a bullish week, which it was. I'm probably 50-50 on that level of confidence at this point. Maybe 75-25. Really, most things that we're looking at on the charts are bullish. The entry points here are suboptimal on a lot of things, and there's no major squeezes on the things that I like, most of them. But one thing that does factor into my thinking here is that the seasonality that I'm showing you. So, did we miss anything? We looked at the indexes, we looked at credit, we looked at VIX, we looked at dollar. Everything leaned bullish. The indexes strongly, HYG strongly, VIX to a moderate degree, and dollar slightly. Let's jump over here. So, if you recall, for the last 3 videos, we have looked at this dynamic between the Mag 7, which is right here on the left, and the QQQE, which is right there on the right. The E version, the Q's, the equal weight QQQ, had been neutral, but look how much it popped off basically very recently, actually. So what does this mean? Well, it means that the market's actually broadening out away from the mags. So that is going to be a little bit of a concern going into next week, because what essentially this means is that the market's starting to broaden out, and at least for myself, somebody who really likes to narrow my focus and maybe only look at the mags, it tells me that the might be kind of that move may have been played. So what's the next move, right? If that move was played, what's the next move? Well, much to my chagrin, although this is healthy, although not my preference, you see how this is now setting up? How many of you are familiar with the RSP? Actually, before I tell you about the RSP, I'm going to ask that you drop us a like on the video, especially if you've watched them for the last couple of weeks and they've helped you stay on the right side of the market, especially last week's video, because I watched, well, I didn't watch, but I go on YouTube and I get a lot of stuff recommended to me. And a lot of the stuff that was getting recommended to me last week when I made the bullish video was bearish stuff. The market's going to crash. The market's going to pull back. September is bearish. Powell is going to drop kick the stock market. So if you found last week's video helpful and it helped you stay on the right side of the trade, drop us a like. If it helped you make a decent chunk of money, then please do drop us a comment as well, because it does really help us even more so than likes with the algorithm. If you don't know what to say, just let us know what your dog's name is, your cat's name, or your favorite color or food. It doesn't really matter. As long as you interact with us, the algorithm will bless the video. So let's dive back into RSP. What is it? Well, RSP is the equal weight S&P. So it is the equal weight S&P in the same way that the QQQE is the equal weight NASDAQ. Why does that matter? Well, it matters because it tells us in some tangential way that when it looks this good, it's 100% with a beautiful squeeze, it tells me that the market's going to broaden out. And probably a bunch of the stuff that I don't like to trade is going to be the focus. So let's take a moment here because that is key information. So we should look at it on the larger time frame. So we look at RSP. And it's actually a high compression squeeze, I just noticed, which is always a little scary. I prefer not to have high compression. But it does look as good as advertised. You can see that it's trading above this previous resistance level, and it has been for many, many days. I would say that's 1, 2, 3, 4, 5, 6, 7 days that it's traded above this key level here that I'm sketching in. So what does it mean? Well, it means the market broadens out. So let's do this. Now, you can hear the disappointment in my voice because I certainly prefer it when it's just the Mag 7 going nuts. And maybe the signal that I'm looking at now says, not so fast, my friend. ARC here is going totally bonkers. Sometimes it really is just as easy as buy green candles in a squeeze, I suppose. But this is actually the kind of stuff that would benefit, right? The smaller stuff. So where are we seeing improvement? Well, the banks are probably going to be a place to focus. That would certainly benefit. The industrials here, big come up on the industrials, huge squeeze. That would probably be a place that would benefit. And I'm not really seeing any other squeezes here other than the industrials and the financials. I would give the edge, obviously, to the financials, much better chart. So this weekend, maybe do a little bit of homework on your own on XLF and XLI. I'll show you what it looks like just so you know what I mean by that. So I have grids here for the different ETFs. So I'm going to go with XLF first. And because XLF looks so decent, max bull plus squeeze, and then we just look to see inside the thing and say, okay, well, what could play well with this idea? And I'm not really seeing very many squeezes here. The one thing that has a squeeze is MasterCard, but it's a suboptimal setup. So maybe just XLF as a basket is probably the play. I don't see specific edge there in any one bank. And then let's pop in over here to XLI. Why are we looking at these two? Because they both are the only two sectors that I see squeezes on the daily time frame. And then on XLI, wow, I was trading GE not too long ago. Look at her all grown up. Probably Uber is a good one. Unfortunately, I bought the Uber flush on Wednesday and then I sold it yesterday. So that thing's going to 120. So that's actually a pretty interesting one. I would definitely look to maybe focus there. I know that the score is probably not as good as we like. I'd like to see green scores, not blue. But Uber actually has a lot of squeezes on almost every time frame. And that flush that happened on that news on Wednesday was probably a good catalyst for it to finally go higher. So this is kind of what I would look at. Is sector first and then individual stocks. And then also understanding that the RSP signal that I showed you is a pretty major one, and it usually means that the market breadth will start to expand, and that means that all of the I call them raccoon stocks because you have to go dumpster diving to find them. So I'm just going to kind of rapidly throw some your way. So some that are popping up here, Sound, right? This is the kind of stuff. Pony. Massive move in Pony. I sent this one to TG and then I didn't take it, even though it was perfect. Pony, SMR. Danielle bought this one in the room today, and it looks crazy to have bought this today, but all these things have high short interest. So if it keeps going, the shorts have to cover. Another one that she bought today and that I also bought on the dip was M&P, MP. So notice that I'm not bringing you, all of the crowd favorites. What else was out there? LMND was another one that popped up. Yeah, this one is a really nice chart. So again, these are really big moves in a lot of really kind of junky stocks. Do I have any others? Less junky, but great pattern is something like Shop. So I think Shop here could certainly retest the highs at some point. And then just to kind of talk my book a little bit, I did go ahead and carry my Meta into next week. So I have $800 butterflies on Meta that expire next week, and it traded really poorly for the majority of the day, and then the last 2 hours it recovered most of what it lost. But then it also opened very well, so I don't really know what to make of it. Today's kind of a wash, really, because it opened great, it traded poorly, and then it closed decent. So I'm going to hold on to the butterflies that I have going into next week on this. One thing that we looked at in this video, as well as in the live room, was Ethereum. And crypto really didn't do much. It continues to be in a very large squeeze, and I am actually starting to lose a little bit of confidence in it, but not enough yet to cut the position because it is still max bull. And frankly, if you look at the last week's candle, all you have is an inside week, right? So you see how it's kind of a little bit of a, looks like a pregnant person there. You have the big candle and then the smaller candle that sticks out. Just a harami inside week kind of stuff. But one thing that I don't like, because crypto has a specific personality, one thing I don't like is when the squeezes get too long, right? I think crypto, in my opinion, works better when the squeeze is fast, and this one's getting a little long, and giving back all of the gains from yesterday is a little bit suspect. But crypto trades over the weekend. We'll see if bulls are active this weekend, and maybe we can just kind of gap above this 4,700 and off to the races. I still like the chart. I still have my ETHA position, and I added to it again today. But I will have to see how it trades on Monday because I don't love the length of the squeeze there. What else is on my book? I bought Amazon today. So, and I'm playing these names, Meta and Amazon. I'm playing them with conservative strategies. Like with Amazon, I did the 240, 230, 240, 245 butterfly for October 3rd, so 2 weeks from now. And basically just looking to play a relatively bullish chart near support with a squeeze. But let's finish with this. Going into next week, most of the things that I'm looking at don't actually align well for the Mag 7. That doesn't mean that they have to fall, but it does, at least to me, tell me that maybe some of the action is shifting elsewhere. And that action could be shifting into banks, industrials, and small caps, specifically the really high short interest stuff. And that belief is backed up by, or at least reinforced by, the setup that we found in RSP. So let's close the video there. RSP here is a big one to know about and to understand what it means in terms of the trading. And so if this chart wants to go higher next week, you really want to broaden out and start looking at all the junky stuff that I brought you earlier in the video. Also, let me throw Carvana in there. Carvana, let's not forget about Carvana. That one could be interesting as well going into next week because it is a high short interest name. All right, guys. Well, that's my time. Hopefully you found it helpful. Leave us a like, leave us a comment on the video, and I'll see you next Friday. Cheers.